Peyton, with wars broken out in the Middle East, what are we seeing in those key air cargo markets now?
Yeah, well, let's jump straight into it. Exciting times all around. If we have a look at our new BAI Spot India market, what you'll see is been severely impacted with price surges, both from India to Europe and India, US East Coast, and India, US West Coast. The main signal indicator you can see from our charts is the gradient of the curve, and you can see they're shooting up. So there's problems on that market. If you move a little bit further afield, where you see a few more nuances, if you look at the new BAI Hong Kong spot market, again to US East Coast, West Coast, and to Europe, you'll see Europe again severely impacted. And for the first time, it's actually priced higher than the Transpac market there. So that's a point to note. You can see a little bit that the gradient for the pricing to the East Coast is higher than the West Coast, but all those pricings are up. Moving on to outbound Korea, again moving further away from the epicenter of the war. What you'll see is the Europe market again severely impacted. East Coast, or in this particular case, is Midwest into Chicago, is impacted, but less significantly. But more interestingly, is the West Coast market is flat. So what that sort of gives you an idea that these prices are being driven by demand rather than fuel.
Because the fuel point is really quite intriguing at the moment. We've had these crude oil prices have been absolutely flying through the roof. They're going up as we talk. They're going up, and they obviously that crude oil price dictate where jet fuel prices go, and that's a key component of any sort of freight rate, including air cargo rates. So what will this mean if so far the movements have been about demand? Are we going to see these prices come filtering through in the weeks to come?
Yeah, I mean, historically, there's always been a bit of a lag with a jet fuel surcharge. So in all our indices that we publish, essentially an all-in rate, which is the air cargo rate, a fuel surcharge, and a security surcharge. I was talking with the Baltic Exchange and the Singapore Exchange earlier this morning. A couple of weeks ago, the market was thinking it's going to be a short war, so the price for oil is at $80 a barrel. I think today is up over $120 and going up further. So a longer war is expected. How does this impact air cargo? There's also longer routing with the flights in some cases. The other thing to start looking out for in my old days as a charter broker, when the oil prices went over $90 a barrel, you would start to consider 2-engine aircraft rather than 4-engine aircraft. And so we do have some of these older freighters on the market, like the bit more older 747-400 factory builds, which start to get more expensive. So maybe that impacts the market.
Peyton, what happens if this disruption continues? Where do you think prices might go?
Well, I've been talking to a number of the actual charter brokers on the market in Hong Kong when this first kicked off. Again, there's just limited supply on the market anyway. You may recall that we had a number of MD-11s coming off the market last year and haven't recovered there. There's limited sort of new build and conversions coming on the market. So there was just very little slack in the market anyway. And so the charter prices that were quoted, typically maybe from India to Europe and the US, price might be around $300,000 to $500,000. It was already being quoted when the war kicked off at $1.2 million plus. I mean, a lot of people bulk to that, but there's not much options in the market. So if you've got to move it and your factory's shutting down, then you've got no choice. So you better move quickly if you need capacity in this market.
We've had these conversations going back over the years, Peyton, when crises have hit. I suspect I know what your answer might be. Should shippers have been hedging for this?
Yes, well, these are the new tools that we're looking to introduce into the market. This is why we built these new BAI Spot indices, so you can use as a settlement price for these types of instruments. It's really for the buyers of freight where it would help most. So it's a bit like having insurance. You could pay a small premium to ensure that your prices don't go above a certain amount. You either exercise that option or you don't. But it's really for the shippers to push this for the forwarders and airlines to adopt these new risk management tools. So it's up to you, the market, to try and get this into action.